Hi, this is Michael O'Leary with the third and last video blog in the installment on IRS examinations, otherwise known to the average taxpayer as an audit. Today we're going to talk about when the IRS audits a taxpayer's individual 1040 tax return. Okay. Once again, just to restate this, the purpose of an IRS examination or audit is not to torture a taxpayer or to squeeze as much money out of them as possible. The ideal goal is to ensure that the tax return submitted by the taxpayer is substantially correct. Not 99.999% perfect, just substantially correct, as close as you can get, without undue hardship. When auditing a taxpayer's individual return, the IRS is really just looking to determine if the taxpayer had any income that they did not report on the tax return, and also, do they have documentary proof to substantiate any deductions they took or credits they're claiming? For example, if they have some self-employment on a Schedule C and they're claiming miles driven, did they keep a mileage log? If they're claiming 2 or 3 children as dependents on a tax return and credits associated with those children, can they prove that they are the biological parents of that child? The child lived with them more than half the year and they provided more than half the support for the children. Okay, there are 2 types of examinations or audits of individuals' tax returns. The first kind are what's called correspondence audits. And this involves a request by the IRS for records supporting specific tax items on the returns, like deductions or credits. An example would be if on your return you claim that you gave $10,000 to your church. Hopefully you have a canceled check proving that and a letter from the church confirming it. Once again, also, if there's self-employment and you are deducting certain business expenses like travel expenses, you can document that by receipts for airline tickets, hotel receipts, etc. Other requests they might make relate to credits associated with dependents, whether it's daycare, whether it's education credits, whether it's the earned income tax credit, which is basically a large dollar credit given to families with children who are low income, essentially borderline the working poor. The IRS will issue a letter 566, and the type of information they're looking for are birth certificates, proof of residency, and proof of payment to substantiate these claims for credit. At the bottom here, there's a statistic of the 900,000 audits conducted in 2018. About 75% of them were correspondence audits, and almost 40% of them dealt with the earned income tax credit. The maximum earned income tax credit one can receive is between $6,000 and $7,000. So there is a lot of fraud associated with the earned income tax credit, and the IRS scrutinizes it closely. Okay, the second type of exam or audit excuse me, is called the Automated Under Reporter Program This is where the IRS compares the income that a taxpayer reports on their tax return to the income documents that the IRS receives for the taxpayer, reported under the taxpayer's Social Security number or EIN, employee tax ID, employer tax ID, I'm sorry, to make sure they match. Realize when you get a W-2, your employer gives one to you, but the employer also sends the information to the IRS. And that's true for 1099s. It's true for your mortgage lender who sends you a document regarding mortgage interest and property taxes. It's true for investment companies. You may have an account at Schwab or Fidelity or E-Trade that's generating interest income, dividend income, capital gains, and you get those documents, but so does the IRS. So when they match them, and it turns out that there was income documents reported to the IRS that they don't see on your tax return, the IRS issues a CP2000 letter to the taxpayer. They issue over 10 million of these letters a year and ask the taxpayer to address their underreporting. They can agree that, yes, in fact, I made a mistake. I didn't put it on the tax return, so assess me the tax, the additional tax, and I'll pay it. Or they can dispute it, and there's a process for that too. Just to be open about everything, a lot of the information that is in this PowerPoint came from a very valuable 2-volume book that I use called The PPC Guide to Dealing with the IRS, Volume 1, Chapter 5, put out by Thomson Reuters. If you are being audited, if you got a letter 566 or a CP2000, if you owe the IRS money, you're getting increasingly threatening collection letters, please call me. I can help.